Tilray Brands Inc., trading under the ticker TLRY, is currently experiencing a dynamic session on the Nasdaq, with the stock priced at $1.695 per share. This reflects a slight intraday dip of approximately 0.88%, a seemingly modest fluctuation that belies the intense undercurrents of speculation and strategic repositioning roiling the cannabis sector. The day has seen the stock navigate a range between $1.61 and $1.77, with a substantial volume of over 48 million shares changing hands, signaling a high level of investor engagement and uncertainty. While many retail investors, perhaps drawn in through platforms like Robinhood or SoFi Invest, are focused on the headline-grabbing potential of U.S. federal cannabis reform, the reality of Tilray's immediate future is being written in a far more complex and nuanced language, one spoken in the corridors of German regulatory bodies and whispered in the strategy sessions of its burgeoning beverage division. The market expectation is fixated on a singular, monumental event: American legalization. The deeper reality, however, is that Tilray's survival and potential prosperity are intricately linked to its international execution and its ability to successfully pivot into consumer packaged goods, a strategy that many cannabis purists view with skepticism. The prevailing narrative surrounding Tilray stock, and indeed the broader cannabis market, is one of a coiled spring, wound tightly by years of regulatory limbo in the United States. The expectation is that any significant move toward rescheduling cannabis from Schedule 1 to Schedule 3, or the passage of legislation like the Safer Banking Act, will act as a singular catalyst, unlocking immense value and sending stocks like Tilray soaring. This belief has fueled significant volatility, with the stock surging over 180% in the last 3 months on renewed optimism. However, this expectation dangerously oversimplifies the landscape. The reality is that the road to federal legalization is fraught with political hurdles and is far from a guaranteed outcome. Relying solely on this binary event is a high-risk proposition. The savvier institutional investors, those utilizing sophisticated platforms like interactive brokers or managing assets through Fidelity Wealth Management, are looking beyond the Beltway drama. They are scrutinizing Tilray's operational efficiencies, its international market penetration, and the performance of its recently acquired portfolio of beer and beverage brands from Anheuser-Busch. This is where the true story of Tilray's future is unfolding, and it's a narrative of diversification as a hedge against the notoriously unpredictable nature of cannabis legislation. A closer examination of Tilray's recent market activity reveals a stock being pulled in multiple directions. The daily trading charts show a consistent pattern of high volume, indicative of a battle between speculative traders and long-term investors. Institutional ownership, while present, sits at a relatively low 9 to 12%, suggesting that many of the larger players are still on the sidelines, waiting for more concrete signs of profitability and a clearer regulatory path. This leaves the stock susceptible to sharp swings based on news and social media sentiment, a characteristic that may appeal to day traders using the Robinhood app, but can be unnerving for those seeking stable long-term growth in their individual brokerage accounts. The upcoming earnings report, scheduled for October 9th, is a critical inflection point. Analysts are forecasting a net loss, albeit a smaller one than in previous quarters, and the market will be laser-focused on the performance of the beverage alcohol segment. This division, which saw a staggering 132% increase in revenue in the first quarter of fiscal 2025, is rapidly becoming the cornerstone of Tilray's strategy. Success here would demonstrate the viability of the company's diversification plan and could provide a much-needed buffer against the volatility of the core cannabis business. Tilray Brands is a global cannabis and consumer packaged goods company born from the 2021 reverse acquisition of Tilray by Aphria. This merger created one of the largest cannabis companies in the world by revenue. Headquartered in New York, the company operates in Canada, the United States, Europe, Australia, and Latin America. Its business is multifaceted, encompassing the research, cultivation, processing, and distribution of medical and recreational cannabis. However, what sets Tilray apart from many of its peers is its aggressive expansion into adjacent markets. Recognizing the slow pace of cannabis legalization and the intense competition in the Canadian market, Tilray has strategically diversified its portfolio. This includes a wellness segment offering CBD products and, most significantly, a beverage alcohol division. The 2023 acquisition of 8 beer and beverage brands from Anheuser-Busch, including well-known names like Shock Top and Red Hook Ale Brewery, instantly transformed Tilray into a major player in the U.S. craft beer market. This move is a clear indication that the company's leadership is not content to wait for the cannabis market to mature. They are building a broader consumer brands company that can thrive regardless of the legislative timeline for cannabis. Comment below and tell me what percentage of your portfolio is allocated to the cannabis sector. Looking toward the future, the outlook for Tilray is a study in contrasts, a landscape of immense opportunity overshadowed by significant risks. The primary catalyst, and the one that dominates the headlines, remains the potential for U.S. federal cannabis reform. The reclassification of cannabis to Schedule III would be a game-changer, easing the tax burden on cannabis companies and opening the door to further research and market access. However, the political will to push through such reforms remains uncertain, and investors who are solely focused on this outcome may be in for a long and frustrating wait. The more immediate and tangible opportunities for Tilray lie in its international operations and its beverage division. The recent legalization in Germany has already provided a significant revenue boost, and Tilray is well positioned to capitalize on further liberalization across Europe. The beverage alcohol segment, while diluting the company's identity as a pure-play cannabis company, offers a pathway to near-term profitability and revenue growth. This is the reality that must be weighed against the expectation of a U.S. legalization windfall. The risks, however, are just as significant. The cannabis industry is notoriously volatile, and Tilray's stock is no exception. The company has a history of unfulfilled promises and has struggled to achieve consistent profitability. The diversification into beverages, while strategically sound, is not without its challenges. The craft beer market is highly competitive, and Tilray will need to demonstrate that it can effectively manage and grow these newly acquired brands. Furthermore, the company's balance sheet, while strengthened by recent debt repayments, still carries a significant debt load. Any downturn in the broader economy or a failure to execute on its strategic initiatives could put significant pressure on the company's finances. Investors considering opening a position in Tilray, whether through a self-investing platform or a more managed solution like Schwab Intelligent Portfolios, must be prepared for a high degree of volatility and a long investment horizon. In summary, the narrative of Tilray Brands is a compelling but complex one, a stark illustration of the tension between market expectation and operational reality. The market is captivated by the prospect of a single transformative event, U.S. federal cannabis legalization. The reality is that Tilray's future is being forged on multiple fronts, from the burgeoning European cannabis market to the competitive aisles of the American beer market. The company's aggressive diversification strategy is a bold and necessary move, a recognition that waiting for legislative change is not a viable business plan. The recent surge in the stock price reflects a renewed optimism in the cannabis sector, but it also highlights the speculative fervor that can quickly dissipate if expectations are not met. The true measure of Tilray's success will not be found in the headlines about cannabis reform, but in the steady, methodical execution of its plan to build a diversified portfolio of consumer brands. This is the reality that will ultimately determine whether the high expectations for this company are ever fully realized.